As part of anyone's review process, you see a bottom like this afterwards. It's like, well, yeah, hindsight's 2020. But you record it with the right tools. You go back and put this under a microscope and say, well, what could I have seen down there when it was happening in real time to predict it was going to look like that, right? That V shape pattern you often see when a low is a low, temporary low, doesn't have to be the low of the day. Couple things in ready game fire approaches. Do you have an area that could be support? Well, we had in this case yesterday's high was 64.70. And so you're anticipating you might get the V shape reaction, but that's not enough. You're not just going to lay bids at good support levels, hope they get filled, and then they're going to work. Never, ever, ever works. You've got to be able to qualify um, predictions of support and resistance. Oftentimes, when it does work, you're not on the team. You put a bid at 70 and it does work, but you didn't get filled. So it rallies from your price, and it's like, doesn't count if you don't get filled. And so you have all these statistics and these how well they work, but if you're not qualifying and disqualifying levels, then you're missing a lot of winners, and that really screws up the percentages. So what can you see in real time to qualify this as an area to buy, either to buy it to open a long or buy it to cover a short? If you're short from up here, you got a winner on, you want to take profit at some point, you're a buyer. If you're looking to get long because you're anticipating this V-shaped bottom, then you're a buyer. And either way, what are you going to qualify or use to qualify a potential low? Well, first is it a potential support? The answer is yes. It's a gap open higher, walks back to the previous day's high, which is 70. We got this gray area to surround it. Get a few things. You start to get aggressive sell market orders. That's these pink rectangles, right? It's interesting about prior buy and sell orders is how does price react to them? Things that happened in the past, while they're important, they're not as important as real time. So that's how you use past orders. Now, these are sellers and they're aggressive. Well, how does price react? If price stops going down when it should, and the price of anything should go down if people are aggressively selling it, if it doesn't, you got to scratch your head that might be the beginning of the bottom. So that's number one. Number two, other people's positions. Right in here, you see 47 by 46. That means there's about an equal amount of longs and shorts that we track. It's a sample size, but fair amount of longs and shorts, but they're balanced. So you can't say the market's short and you're comparing it to what? People who are long. You have to compare something to something else to find value and to make those remarks. So yeah, shorts do start to come in, but is it ever get out of balance? What do you want to see to predict that indeed it's going to be a V-shaped bottom? You want to see shorts come in and you want to see them to overtake longs. And so we call a laser, which is these green or red lines that you'll see next to the footprint bars. When they start going red and get longer, that means more and more shorts are coming in versus longs. Why do you want to see more shorts than longs if you're predicting a bottom? Because shorts turn into what do they turn into? They turn into buyers. What do you need for the price to rally? Not just buyers, you need future buyers. Shorts are future buyers. And that's what, if you're trying to predict the future price, you got to predict future buyers and sellers because those are the things required to move price up and down. So you want to see more shorts, but here's what's really important. These numbers right here, what we call the chaser. You could see that 1,000 on this particular day was a lot by 409. That's the people who want to buy it versus the people who want to sell it. This is not just total accumulation of your depth of market where you could just add up the bids, resting bids, add up the resting offers, and come up with these two numbers. These are orders that are unique, that are coming in, that are being flipped around. We've been able to qualify as real buyers and sellers, more likely to stay in and they want to do business instead of just playing games, which most of the action on your dome usually indicates or shows. So, with respect to that, this number changing is when you really got to start paying attention. And I'll bring it back a few beats here because what do you think it showed on the way down? It showed more sellers than buyers, right? When does that change? Where you go from a lot more sellers than buyers. Here, look at this, 1,200 versus 400. That's what it is on the way down. Great. If that begins to change like it does here, still 1,000 by 500. Keep an eye on the numbers inside that yellow circle. Right here is when it changes and buyers start to take over the sellers, right? Buyers, future buyers versus future sellers. Does this got to get you long? Maybe. Yes. Does this got to get you to cover a short if you're short? Yes. Along with some of the other information. But this, in and of itself, to know that it went from aggressively selling balance to balance is your first indication that a bottom might be forming and you're starting to qualify potential support. All this does is get more and more aggressively buyers over sellers. So it went selling balance to buy imbalance and pretty aggressive. Then more shorts also start to come in. Then you start to breach these sell market orders. Do you see how you're reading order flow and making sense out of it? At the time you need to trade and make decisions. And do you see how this is objective? So you're making comfortable decisions without the emotion, which generally we're all going to have when you open and close positions or get close to opening or closing positions. We're all going to be a little bit more emotional than in 3 hours from now or 3 hours prior. So you want to keep yourself as objective and calm as possible. Strip out randomness. You have to predict future buyers and sellers before you predict the future location of price. In fact, that's what we are predicting, future buyers and sellers. If you can't predict future buyers and sellers, then you have no job, you have no right to try to predict price. All right? You have to be able to be looking for where future buyers and sellers would come in order to say you're bullish and you think you're indeed going to get this V-shaped pattern, which we started this video. This is what's important. This is what creates the V-shaped pattern that we eventually get. And so, boom, it runs up and it doesn't seem like a good guess. It's not hindsight's 2020 anymore. When you get in and say, is there something in real time that I could see that gives me an advantage over others? And while this is hopefully simple to understand the way I'm explaining it, where these numbers come from is where the complexities are. So it's not real simple like everybody would see it because everybody doesn't see it. They're not in front of this information. And then even if they have access to it, which they don't, they wouldn't know what to do with it anyway. And so it's really important to know what questions to ask and really get good, really get good at at qualifying and disqualifying, especially the disqualifying part. Because if you could disqualify a level that you thought was good support, you disqualified it and boom, it runs right through it and you disqualified it, that's saving money. If you don't open the long, you didn't get stuck and chasing that loser. Saving money is like making money in this business. So disqualifying bad trades is just as important as qualifying good trades. But qualification is part of reading real-time order flow to make better decisions when the SHIT is in front of you. Because every other time it is hindsight's 2020. But put yourself in a position to see this information so that you can make this prediction. And when you actually see it come to fruition, it doesn't feel like a good guess. Because guess what? It wasn't.